we own 60 billion XRP, the company. I don't know that Bitcoin and Ethereum is that much more decentralized in terms of holdings. Right? I think Vitalik has a fair bit of Ethereum. The early Bitcoiners have tons, right? What I would say is it puts us in a very interesting position with respect to economics. Because, number one, so my job is building liquidity. One of the ways you do that is you lend XRP to people so that they can provide liquidity in markets. If you want to provide a bid and an offer in a market, you have to have cash to buy something. And if you want to sell it, you have to have the thing to sell. Well, the only way you sell something is you either own it or you borrow it. In the Bitcoin space, it's really hard to borrow stuff. It's expensive, 10 to 15% annual interest rates, and it's hard to find really chunky loans. With SRP, people can just come to us and be like, hey, I want to borrow some SRP. Not anybody, but really professional market makers. It's something that we can do that nobody else can do, right? In that flow that I described where somebody's buying XRP, moving it, and selling it, we can guarantee the rates. So everybody always asks me, well, but you're bridging between two fiat currencies. Like, you have to do two hops, there's two spreads you're crossing, the liquidity's not great, it's volatile. No problem. I will pay you the difference. If you're going across this rail and it's expensive, I am very much incentivized to make sure that you do that. Because the more liquidity, the more utility, in theory, over time, the more valuable XRP will be. So in the short run, we're very much incentivized to make all those frictions go away. So I don't see our holdings as a detriment, and I definitely do not care if there are skeptics. We're skeptics about everything. But it puts us in an incredibly powerful position to actually activate the use cases.
In terms of crypto, Mike, I got to ask you about Coinbase. We haven't even seen the notion of fee compression play out. If it's going to play out, and it seems like maybe that's the next chapter in the crypto exchange book, do you like this business? Are you involved in this?
The Coinbase has 100 million, users or that have signed up for accounts. I think about 10 million active users. To have done that in 10 years is kind of miraculous, right? They built one of the larger retail businesses built in America in a long, long time. If you compare it to Fidelity, who had, 100 years to build their 30 million accounts. And so that's an asset that I don't think should be discounted. They have a cost problem. I mean, if you looked at their numbers, their revenue was down some, but their costs are really high. And so I would assume Brian and his board are pretty focused on getting cost under control. And so I'm not as pessimistic Coinbase as the headline numbers might have been yesterday. They're a 900-pound gorilla in our space. And so in lots of ways, even though they're a competitor in some areas, I'm cheering for them.
Last quick question, Mike. What is the highest conviction crypto trade you have on right now?
Right now, it's Ethereum. It's moved a lot, but this merge is a big deal. It takes the supply of mining that used to constantly sell and actually locks it up in what we call hodlers in long-term contracts. And so you're going to see the supply-demand imbalance in Ethereum, the second biggest crypto, really shift. Prices are always set on the margin. And so I think that was the enthusiasm that this merge finally happening is going to continue to draw money into Ethereum.
Welcome to the Crypto Teacher. And I come back with that video just to make you think. And you just heard from Miguel Villa's ex-Ripple employee on loaning XRP. And that's the reason why those leases are so important. And this gives the banks the ability to move billions and billions of dollars for pennies, plus you get real-time settlement. Now we have Novogratz on Coinbase, and we know Andreessen, my guy, has been there from the beginning. This is all about the fourth industrial revolution, and that's what Novogratz is not going to state. Yes, Coinbase is taking a hit right now, but we know they're really for the robots, algorithms, and drones, while the sheep go inside the metaverse. Coinbase is for the new digital economy. I brought you plenty of videos with Brian Armstrong stating that they were going to be building a new economy. And then we have Novogratz on the Fed rate hikes. And a lot of people think the Fed is going to pivot and start cutting rates in the short term. But guys, we know that's not going to happen. We know what the Fed is about to do. They're about to destroy this whole legacy market, so therefore the fourth industrial revolution can rise. They're not going to cut rates until WW3 has started. And remember, the Crypto Teacher told you. Remember, the NWO causes the problem. Wait for the reaction and run in with the solution. They printed all this money, causing the inflation. That's causing the problem. Now we have to wait on the reaction. And we know the reaction is going to come from people getting laid off. The labor market starts shrinking. And the people are going to be begging for that free money, which they've already been programmed to get over the last 2 years. So universal basic income be rolled out, and that programmable money will be airdropped. But what the people don't know, they're going to be told what, where, and when and how to buy. They have 3 to 6 months to spend it, or poof, is gone. And remember, the crypto teacher told you because he knows. When it comes to the New World Order, it's all planned out. You have a wonderful day.
How do you think about, if we don't have a collapsing number and it's sort of a slow grind lower, but still stubbornly and persistently high, Mike? I mean, how do you think about that, even aside from what the markets are pricing in terms of Fed rate hikes? What are you thinking of in terms of Fed rate hikes and the impact on the economy?
Jay Powell has been pretty clear, at least was pretty clear, that they've done a lot. They're going to do at least another hike in September and probably one in November. And then he's going to pause and see if those hikes actually have, remember, monetary policy has lagged. And so raising rates from 0 to 3.25 or 3.5, wherever they end up, he'll pause a little bit to see their impact. I think he was pretty specific on that last night. What was interesting was the market was pricing him pausing and immediately cutting. And I think that might be Pollyannish.
Right. So the pivot is, you should pivot away from the pivot for all of those who are thinking about a pivot. I mean, you sound like you think a soft landing is possible. You sound pretty,
I'm skeptical of a soft landing. What's in my intuition, my core, is we had one of the great asset bubbles of all time, fueled by the greatest monetary injection of all time. And it feels like it would almost be too easy to get out of it with a soft landing and a 20% pullback in the S&P and you start rallying again. I think what we're missing in lots of ways, and why the stock market is so strong, why retail stocks and meme stocks are back, is when notional GDP is still high, nominal GDP is still high, there's money in people's pockets. And so I think the Fed is going to literally have to, over time, hurt the labor market. And there's a lag in the labor market. There's still help wanted signs all over. And so until those help wanted signs get taken down, we're going to pause and we'll see if the market rolls over. We certainly see signs the economy is slowing down. But, again, when nominal GDP was as high as it was, it makes things tricky.
Right. So the pivot is, you should pivot away from the pivot for all of those who are thinking about a pivot. I mean, you sound like you think a soft landing is possible. You sound pretty,
I'm skeptical of a soft landing. What's in my intuition, my core, is we had one of the great asset bubbles of all time, fueled by the greatest monetary injection of all time. And it feels like it would almost be too easy to get out of it with a soft landing and a 20% pullback in the S&P and you start rallying again. I think what we're missing in lots of ways, and why the stock market is so strong, why retail stocks and meme stocks are back, is when notional GDP is still high, nominal GDP is still high, there's money in people's pockets. And so I think the Fed is going to literally have to, over time, hurt the labor market. And there's a lag in the labor market. There's still help wanted signs all over. And so until those help wanted signs get taken down, we're going to pause and we'll see if the market rolls over. We certainly see signs the economy is slowing down. But, again, when nominal GDP was as high as it was, it makes things tricky.
We're going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
This effort, and China has big plans for this. They intend to seed their digital yuan into the global environment by giving it away to visitors at next winter's Olympics. When they arrive at the airport, they're going to get yuan digital wallets. They're going to receive digital yuan. They're going to use it throughout their visits to Beijing, and then they're going to take it back to their home countries. They see this as a huge advantage. Why? Because who controls the underlying protocols, who controls the underlying standards of the future of money will control the future of money.
Most powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, you know I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids' books. You know, I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate, not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, so therefore we can start the re-education now. Because as we see, the 4th Industrial Revolution foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Grandma Tam save the village. Part 2. King Joshua and Grandma Tam save New York from COVID-33. Part 3. King Joshua and Grandma Tam goes to China.
It's mandatory to get part 1, part 2, and part 3 of this series. It's time to re-educate Generation Z.